updated technical analysis on Eli Lilly, LLY, company of the healthcare sector and drug manufacturers here off the daily interval, and really to many other traders. This may not be one of the most well-defined head and shoulder tops. In my experience, though, I perceive this vulnerable bearish pattern with similar texture and identity, and many traders may not see it. Algorithmic programs will, and it needs to be respected on all consideration. And here is your left shoulder. You've got a head forming off to the head. Might look like a double head, but again, that's your head. And here's your right shoulder here. We have negative and or bearish divergences that have continued to establish and construct on all three indicators going back as far as August on some of the weekly intervals in from 2021, and snap, here we are starting to action. I had mentioned about 4 weeks ago on this channel about how vulnerable Eli Lilly had looked, in my opinion. And this, take it as you will, this looks like a solid sell signal. It would have been a lot better if we had that solid close on Friday. It's as good as anything can get. Could be some after hours bids. And here is the before video of where I mentioned 4 weeks ago being in a technical posture that was a little vulnerable here with again bearish divergences that had constructed for quite some time, and we were just actually hitting that. Here's your left shoulder, here's that head. We were barely forming the head here. Came back out, and it really just coiled up off this primary uptrend line and the negative divergence that had been constructing here, and really starting to get tight, real coiled, and snap on Friday, issuing a sell signal. In my opinion, anything is possible. We could have a counter trend or snapback potential rally right back up, which would be a 3.5%, but call it about a 3.5% rally. Big rally if we even get there, which would provide an objective entry short, an additional objective entry short, and or add on to your objective entry. Remember, this primary uptrend line was the key focus to watch, where you could have start to scale in slightly on a snap of that trend line. And here we are, back up on a counter trend rally, potential counter trend rally, being that first target 345.42 on a complete gap support backfill for a 6.8% drop, down to 340.92 for an 8% crash, down to 334.37 for a 9.7% crash. And if things get real bad, we could snap to the top of the gap off September's gap there for an 11% crash, and a revisit back to the primary big uptrend line there, 312, called 312.31 price support for a 15% crash. So the risk reward ratio is definitely skewed to the downside, and a beautiful sort of a head and shoulder type fill. Again, one to be respected at least. A lot of traders may not see it. It is at slightly at an angle here. It's an offset head and shoulder looking top there. Zoom in here to the hourly interval, and we have put definitely a 3 black crow bearish continuation pattern here on the hourly, and we'll see how that ends up playing out on Monday. But again, the risk rewards there definitely skewed to the downside. Huge volume out price indication up in this range, and I would only suspect a pretty big rush for the exits, where a vast majority has bought in up in this key up in range here, and I would only suspect a little bit mirror panic. We have oversold indication on some of the RSI with extreme oversold conditions. So again, I would suspect some sort of counter trend rally and or snapback rally if we get that, and maybe the action will really start to subside itself, and for more downside on Tuesday. Anything's possible, or we just start to snap down below and put in a maybe even a potential bear flag continuation pattern, or we get that continuous bearish continuation bear flag continuation pattern there, which would be another 3.8% drop. Yeah, just about right there to the peak there. Call it 349. And again, I would only suspect a first target hit there to 345.42 for a complete backfill of the gap.